Well, there's been a surprising uptick in manufacturing activity. The latest Barclays Sponsored Purchasing Managers Index increased to 53.7 index points in June from 51.9 in May. The index, which gauges the health of the manufacturing sector, remained above 50 points for the month of May. This is the fourth consecutive monthly rise. Several components in the index rose. They include new sales orders, employment and business activity. Well, joining me now is Miyelani Maluleka. He's an economist at Barclays Africa. Thank you very much for joining us.
Pleasure.
Good stuff. Now, the index now recording a fourth consecutive number above the neutral 50 mark. Yes, there's been some up and down in the past few months, but it's remained above 50. Does this suggest a sustainable improvement in the sector?
I think first of all, it's a really encouraging print, especially when you consider where we were, from especially in the second half of last year. And given the really weak start to this year, fourth straight month above the 50-point neutrality mark, and I think kind of suggests that we are seeing the manufacturing sector stabilizing a little bit. But and also when you look at Q2 as a whole, the average for the Barclays PMI was basically the strongest since the second quarter of 2011. So it's really encouraging, I think, for a sector that has seen a really deep slump last year. But I think what is also clear right now is that there are some headwinds for the outlook, particularly given the developments in Europe last week.
We'll touch on those shortly, but sure. I wanted to ask, to what degree do you think the relatively weak rand this year actually impacted the good manufacturing number that you're seeing?
I think it's been a really important theme for the sector for the past few months. We've been seeing this in the underlying data of the PMI, and we'll also, when you try to speak to manufacturers, we are getting a sense that although domestic demand has been pretty weak and growth has been fairly muted, the cheap exchange rate has provided a bit of a buffer for manufacturers, particularly those that are export-oriented or those that are in import substituting industries. So I think it's exactly what we're seeing in the new sales sub-order index, a bit of I think export competitiveness coming through there from the weak rand.
Now, I see from your report, it's indicating some cost pressures coming through in May and in June. Do you think that's going to continue, more so because we got a PPI print recently telling us that inflation at the producer level is slowing down? It's still rising, but it's slowing down. So what really is the picture, and can producers really pass these prices on to consumers?
It's a really good point, because the one thing that we have seen with the prices paid sub-index over the past few months is there was a really strong increase. And in June specifically, the increase was a little bit more modest compared to the past few months. And when you look at this in the context of the May PPI data, I think the picture that comes through is that despite the sustained depreciation in the exchange rate, we've seen very little pass-through to prices. That said, I do need to indicate that at around 80, that index itself is still quite elevated, and what manufacturers have been saying is that they have struggled to pass these increases through to the consumer because the demand environment is just not allowing of it. But I think we'll just need to pay close attention to what happens going forward, because I think if we do continue to see this index at an elevated level, we might start to see some of those, I think, pressures go through to the consumer.
One of the sub-indexes that you constantly publish is the employment index, and that's been really lagging for a long time. It was sort of in the 40s, but now I see that it's registered above 50 for the past two consecutive months, May and June. That's a good sign. Does this mean that jobs are being created? We know that producers are more interested in mechanization these days.
It's a good sign. The manufacturing sector lost, according to Stats SA, 100,000 jobs in the first quarter of this year. But I would remain a little bit cautious in interpreting this latest index as an indication that we're going to see a strong rebound in employment. I think what we do need to see is a continued increase in that index, I think, to more comfortable levels. So I think to be able to say, look, the employment picture in the manufacturing sector may begin to turn around.
And then lastly, does the glimmer of hope that we now see with the manufacturing numbers, is that obliterated by Brexit?
Look, I think that there's quite a number of issues here. The UK itself is, of course, an important trading partner for South Africa, but for the manufacturing sector specifically, It's not a big market. Only about 3% of our manufacturing exports go to the UK. But the other issue here is that to the extent that the UK weakness affects the global economy, I think that will come back to South Africa in a strong negative way. So I think that is the big challenge going forward here.
So, we run the risk ultimately of seeing some improvements in the economy, maybe 18 months down the line, and then the contagion effects of Britain may be affecting us.
I think absolutely, because the Europe as a whole accounts for about a fifth of all of our exports. But the one thing that I wanted to highlight is that there's still a great deal of uncertainty about this Brexit issue. It's true that the British people have expressed a wish to exit the European Union, but what is pretty clear now is that there's still a political process that needs to run its course, and there's this great uncertainty about when the so-called Article 50 of the Lisbon Treaty will be invoked, and you know, what sorts of negotiations that the UK will have with the EU, and what sort of concessions they may be able to come out with in those negotiations. But I think the key thing here is that Brexit is a clear negative risk for South Africa's manufacturing sector.
Okay, we're going to leave it there. Thank you so much for your time. That was Mialani Maluleke. He's an economist at Barclays Africa.